So we're now into the final phases of the bull run, and you're probably sitting there wondering, when is the all-time high? When is the top? What are some of the signals I should be looking out for in order for me to get out before the bear market occurs? If we just look at the charts really quickly, Bitcoin back in 2022, its all-time low to now, it's put in a 7x. So over 700% trading as high as 126 before pulling back now at 108. If we look at the S&P 500, it's also at its all-time high, 6,900, putting in 18%. Same thing with gold this year. So gold went all the way up to 4,300 before having a 10% pullback and trading roughly at 3,900 to 4,000. Everybody's remember these pictures earlier from about a week or 2 weeks ago when people were lining up for gold. So if you look at gold's price, look at this chart by Vance Spencer. So back in 2021, gold topped out at 2,100 before pulling back. Bitcoin went on a tear. Here's 2025, same thing, 4,300, dropping back 10%. We'll have to see what Bitcoin does, but if history rhymes or repeats itself, we should see it charging up. I like this chart by AO BTC analyst. He talks about Bitcoin being in its final stages of this bull run, and I agree with that. This is the blow off the top phase, the banana zone. This is the phase where Bitcoin goes parabolic. But if you notice right here, before that parabolic rise, every cycle, it's been getting longer and longer. Notice from here to here, it's a longer cycle. From here to here, it's a longer cycle. Now, Bitcoin feels like it's grinding out slowly and slowly heading up. It doesn't go parabolic like it used to in the earlier cycles. So here's my TLDR on what's happening in the next 6 to 12 months. Now, what we know is we're right here in Q4 of 2025. What the Feds have done is they've lowered rates yesterday. So they've lowered them 4%. They also talked about QT ending in December. So what happens is that liquidity gets injected into the market. The way I see things is that there's at least 3 to 4 more cuts, especially around May of 2026 when Jerome Powell gets out of office and then the Trump appointee gets in, who will be a mega bullish Fed chair that's going to continue to cut rate. So I see liquidity flooding the market, extending the ISM and the business cycle getting longer. So in my opinion, the true bull run, that last parabolic phase, is going to happen in the next 6 to 8 months, and around sort of Q2, Q3, that's when I'm looking to get out, because I believe that maximum liquidity is coming in and we're going to get that final parabolic run. And then later in 2026 around Q4, my best prediction is I believe that's when the bear market will start to claw back. You're going to start seeing signs of the bear market when liquidity starts to turn around. And at that stage, somewhere around there into 2027, we should be seeing our next bear market. But the good news with that is if you are around during that time, that becomes the best generational buying opportunity. That's when you can buy Bitcoin really cheap. You can buy things like ETH really cheap. Some of your favorite stocks like Nvidia, Tesla, BMNR, those are generational wealth opportunities that you can have. So in today's video, we're going to be talking about why the cycle has been extended. It's not just the halving of Bitcoin, but it's actually the macro global liquidity that's been driving this Bitcoin cycle. So when you walk away from here, I want you to look at key terms and understand key concepts like liquidity, the ISM, the debt refinancing cycle, and then finally, what happens if you have to HODL through all of this and you end up at the bear market. So welcome. My name is Colin. For those of you who are new around here, what I do is I do fundamental analysis on stock and crypto projects that I believe have long-term value. So remember that none of this is financial or investment advice. The crypto and stock market is incredibly volatile. You risk losing your capital. So make sure you do your own due diligence and research before you get into anything. Furthermore, I do not have anything to sell you. This is not a sponsored video. I do own Bitcoin, Ethereum, and BMNR. Finally, if you're on Twitter, give me a follow on X where I could tweet out the information a lot faster than I can make a video. If you like this video, please consider liking, subscribing. It'll really help with the YouTube algorithm. So if that's out of the way, let's get started. So to fully appreciate Bitcoin's 4-year bull and bear market, we have to look back at the 4-year cycle. In the 4-year cycle, which most of us have come to know and love, every 4 years there's a halving, and roughly about 500 days after that halving, Bitcoin makes a new all-time high. Well, it's 2024 in April of last year when it's had its halving. If you project out that same timeline of 12 to 18 months, it would have landed on October of this year. Right now, Bitcoin should have made a new all-time high, and then after that, the bear market comes. Well, this is not true anymore because we understand that the cycles are longer. And today I'm going to show you why. So if you take a look right over here, October 2025, right now, Bitcoin touched 126Ks and then it had its pullback. Is that the very all-time high? Well, if you look at the macro data and what's been driving the cycle, it's likely not the all-time high and that we'll see Bitcoin make another all-time high. So the 4-year cycle was based on Bitcoin's halving. Every time we reduced that supply, there was a supply shock followed by price surge. That's what drove the previous bull market, or at least people thought they were. And like I said, this year it's a little bit different. Now, if you look at the Bitcoin supply, 95% of it is already in circulation. We'll be fighting over the next 4% in 10 years and then the last 1% in about 100 years from now. So every single cycle, the supply factor in terms of the shock factor and its impact on the price has been dampened and lessened every single cycle. So if you look at history, yes, history does not always repeat itself, but it rhymes. In 2012, right over here, notice it went parabolic. In 2016, again, down parabolic. In 2020, we had this sort of double top right over here before a pullback going parabolic. Yes, history doesn't repeat itself right now in the 2024 cycle, but it often rhymes. So what happens next? So the key is understanding what drives this final phase. And like I talked about earlier, these cycles are getting longer, okay? So we're now in that parabolic zone, that final phase where it's going to push Bitcoin above. But what's the reason behind these Bitcoin cycles? So we look at data from the lowest point from the last cycle to this cycle, and we compared it to the previous cycle. This current cycle right here in black has already exceeded the length of the previous 2 Bitcoin cycles, right? The previous cycle was about 1,059 days. We're now 1,060 days, 1,061 days, plus out from the previous cycle. So we know that this cycle is extended longer. So how long is this cycle going to last? Where's the top and where's Bitcoin heading? So in order for us to fully answer that, let's take a look at some of the macro, the cycle top indicators that we'll be looking at. So one of the top indicators that people in the industry pay attention to is the Pi cycle top indicator. It was invented back in 2019 by Philip Swift. It actually predicted Bitcoin's top price within a margin of error of plus minus 3 days. Talk about the accuracy behind this indicator. So how do you use it? It's when the 111 days moving average crosses the 350-day moving average multiplied by 2. Now the name pi comes from taking the 350 divided by 111. That's where you get the 3.15. It's very close to our real pi number of 3.14. So if you take a look at it right over here, the last 3 cycles, 2013, 2017, 2021, you'll notice that back in 2013, 2014 right here, when they cross each other, that's when Bitcoin's price was topped out. Notice right over here, the 2017-2018 cycle, right over here, when they cross each other within 3 days, margin of error, the same thing with the 2021 cycle. So what's going to happen in this cycle? If you extrapolate out, the pi indicator predicts that it will top out in January of 2027 at a price of roughly close to 395,000. Now we'll get there. In my opinion, I don't think so. I think this cycle will top out a lot sooner than that, but it actually predicted the last 3 cycles. So if it proves me wrong again, I would be more than happy soon. So next top indicator is MVRV. It's one of the favorite one that people look at. It looks at the realized value of Bitcoin compared to its market value. Zones of where Bitcoin is overpriced or underpriced, so overvalued, undervalued. And then finally, it predicts between 150 to 200,000. So right over here, here's Bitcoin's price in black. In the blue line, that's the realized value of Bitcoin. That's when Bitcoin is moving on chain. And then the yellow line is the MVRV's Z value. Okay, so it's the Z score. And notice whenever the Z score enters this zone right over here, it's when Bitcoin is overvalued in the previous cycle, in 2021 cycle. Right over here, you notice that Bitcoin is nowhere close to that value. So what does it say? Right now, Bitcoin is not overvalued. And then the last metric is sentiment analysis. So this one is a soft metric, but I actually look at it because when you look at the data, it's very helpful. So everybody's seen this, the fear and greed index. When it's neutral, it's 50. When it passes like 50, 60 at 75, that's real greed. And then of course, when it's back to minus 20, that's when it's fear. Okay, so if you look back at the last bull market right over here, you'll notice that Bitcoin topped out roughly November 8th to November 11th. And if you look at the fear and greed index, it actually passed 70 to 75. So it was a sustained period of greed all over the place. So I pay attention when Bitcoin makes its all-time high, and when you have a greed index over 70, that's when you know things are getting very frothy and things are getting at its new all-time high. And also something something like the Coinbase app. If you recall back in 2021 when Coinbase app, when it made it to the number one of the App Store, that's when Bitcoin, roughly around the same time, October, November, 10 days later, Bitcoin made its all-time high. So these are some of the things that I watch out for when I'm looking at sentiment analysis and looking at what's happening in the market. So setting aside those indicators in the Bitcoin 4-year halving cycle, a lot of the macro folks have suggested that it's actually liquidity, the business cycle, the ISM, and the debt refining cycle of the government that's actually the most important macro indicator that drives the Bitcoin 4-year bull market and bear market cycles. So a lot of what I'm going to show you is actually work by Raoul Pal. I know a lot of people know who he is. He's over at GMI, at Real Vision. He talks about how liquidity and macro is the driver that drives these 4 years bull bear market cycles, not only for Bitcoin, but for also equities as well. So let's talk about this debt refinancing cycle and understand why liquidity is the main driver of these bull and bear market cycles. So we look back at the global liquidity chart versus Bitcoin pricing. You see that every time Bitcoin's topped, it's aligned perfectly with the expansion and contraction of global liquidity. In 2013, right over here, 2017, 2021. And notice every time global liquidity has contracted, that's when the bear markets are. Same thing with 2021, right over here, when global liquidity contracts, that's when we enter the bear market. The real question is, what's happening in 2024? So to get a full understanding of it, we have to understand these debt refinancing cycle that our governments go through. So here's our national debt right now. It's at $38 trillion and it ticks every single day. If you haven't seen this before, it's a good thing for you to see right now to see how quick and fast the debt is going up. You also notice that now we're about 120% of debt to GDP ratio now, whereas the last century has always been at least half of this. So how does our government and the feds manage this debt? So they manage it through treasuries. This year alone, $9 trillion of treasuries are coming to maturity and they have to refinance this debt. That's why we call it the debt refinance cycle. So when these treasuries come to maturity and they have to be refinanced, the way governments and central banks do it around the world is that they issue new treasuries. Now, these new treasuries will come with much more favorable terms that will attract investors. How they execute this is by injecting liquidity within the system. By injecting liquidity and more cash in the system, investors have more money to purchase bonds. By lowering interest rates, it makes it easier for investors to borrow. So over the next few months, you're going to start to hear a lot about chatter with regards to liquidity entering the system. You'll see central banks cutting. You notice that the Feds cut. They also talked about ending QT in December. Although it's not true quantitative easing, the overall driver is injecting liquidity within the system. You'll also hear a lot of people talk about the balance sheet, the Feds expanding their balance sheet, the use of that Treasury General accounts, which is basically the Fed's checking account, the reverse repo. You're going to hear a lot of talks about this. This is going to amplify fiat debasement so that in order to pay for these treasuries and this debt refinancing cycle that they have to refinance all this debt that's coming to maturity, you're going to hear about this. And of course, risk assets reacts first to this liquidity, which is Bitcoin, Ethereum, and stocks. So I'll show you the data that really explains why this cycle is being extended and why liquidity is the main driver. But the TLDR, if you get nothing from today, is really liquidity. And the government debt refining cycle is truly the macro indicator that's what's driving these 4-year Bitcoin or stock prices that we see. So one of the key data that Raoul presented that shocked me was that the government is debasing our money at 8% in order to pay for the financing of the interest on the debt that the US government has right now. So if you add that 2-3% to it, that 2-3% is inflation. That's on top of the 8%. So 11% becomes your hurdle rate for you to clear. Any investment that you're in should at least be clearing 10-11% for you to stay alive above the government debasing our money on top of inflation as well. You can see right over here, the liquidity rises in the US as the debt as a percentage of GDP rises. You can see why liquidity is rising. It's rising so that they can pay off those interest payments on the debt that they have in order to refinance those debts. So this debt refinancing cycle is what creates these economic seasons that you see behind those 4-year cycles. And it's not so much the Bitcoin halving that drives the price. So notice right over here in the 2021 cycle, you start out in spring when they continue to print. Into the summer, they print money into the fall. And then finally in the winter, it drops drops off when the Feds stop printing money. Back in 2013, right over here in the spring, okay, you go into summer, you go into fall, again, in 2017, it drops off as the Fed stop printing. So this is what creates these 4 years economic seasons and cycle that's been pushing that Bitcoin price. The next idea that's important to understand is the ISM, basically our business cycle. You'll see it reported as the PMI most of the times. You'll hear numbers like 47, 49, 50, 55. What does it mean? It's basically our business cycle. It's the most important economic indicator of how the business cycle is doing. So if the ISM is above 50, we're in expansion mode. A lot of businesses are conducting their activity, money is flowing in the market, we have an economy that's accelerating. When it's less than 50, it's basically our economy is in contraction. So the ISM really is the everything. It's the confidence, it's the earnings, it's how our business cycle is doing. So the ISM usually tracks this 4-year business cycle. So what they found this year was interesting because the ISM did not fit this 4-year debt refinancing cycle anymore. So when they looked close at the data, they actually noticed that the debt was moved from 4 to 5.4 years instead of that traditional 4-year cycle. Now, why was the debt moved? It was moved because interest rates were dropped to zero in 2021 to 2022. The governments had to extend that debt curve, therefore increasing that debt maturity, extending it out from 4 to 5.4 years. So that's why this cycle, this Bitcoin cycle, will be longer than the previous one because of this extension of this debt refinancing cycle. So what we get is a longer business cycle that goes into 2026. If you ever hear our government talk about it, whether it's President Trump or Scott Bessent or Howard Lutnick, they're always talking about lowering interest rates during this cycle. They understand that well. They understand that the debt needs to be refinanced. So what's going to happen is you're going to see a crazy amount of printing in the next 12 months. So this entire year, the Feds held off. They didn't cut a single rate all the way up until September. And then before October 29th, remember the odds was a 99% cut. And what happened? Well, the Feds cut just exactly like what we were talking about. Of course, Powell talked about raising doubts about going into December, but he did talk about ending QT in December. So we're starting to hear that chattery. We know that the Feds are not on the same page because we had a couple of people who dissented, one towards the 50 basis point cut, one towards not cutting at all. So we see that the Feds agree on nothing, but the key is watch what they do, not just what they say. And the key driver is they're actually cutting rates and pumping money into the economy. So in my opinion, we still have quite a few dates. I think that they're going to cut all the way into next year. And remember that in May of next year, that's when Powell is on his way out. We'll get a new Fed chair that is much more aggressive and bullish than he is. Now, not just our Feds in the US right over here. What are some of the other central governments who are doing? So Bank of Canada cut also on the 29th. They lowered it by 25 basis points. But if you just take a look at the pattern, look at their behavior, it's not just this single cut, but if you track back to June of last year, notice the amount of cuts that the Bank of Canada BOC has made. You know, a quarter, 2.5 points. So if you had to summarize it from last year to this year, they've actually made 9 cuts. And it's not just the US Feds and the Bank of Canada, it's also all of the Feds around the world, all of the central banks. If we look back at the last 24 months, they've actually cut 312 times. So there's a lot of cuts. Notice the November 2020 during our COVID times, right? Going back to 2020. If you look at back in 2020, they made 196 cuts. Right now, in the past 12 months, they've already made 164 cuts. So in the background, if you look at the data carefully, the central banks have started injecting liquidity into this business cycle. So the ISM is an indicator of our business cycle. We know we're going to get a longer business cycle, but how does it apply to BTC's pricing? If we look back right over here onto the charts, we can see if we zoom in right over here, notice the 2021 cycle. Here's when the ISM hit 50, okay? So as the ISM hits 50, you know that we're in expansion mode. As the ISM expanded out, notice it topped 60, it went over 60, 65. Notice where Bitcoin hit the peak right over here when the ISM peaked out and it topped out, okay? If you look back at the previous cycle right over here to 2017, 2018, here's the ISM hitting 50 right over here. As the cycle starts to expand, that business cycle starts to expand, we can see the price of Bitcoin expanding up. And notice right here, ISM above 60 again, Bitcoin has peaked out. So traditionally within that 3 to 6 month window, Bitcoin will peak out as the ISM goes into its peak mode above that 60 level. So if we looked at it Bitcoin is a macro asset. It moves with the business cycle. As the business cycle expands ISM above 50, we know that Bitcoin's going to charge up. And as ISM contracts below 50, we know that it's a risk-off environment and Bitcoin cools. So tying liquidity back to the ISM, we know that as governments and central banks inject liquidity within the system, it drives the economy. So notice that the liquidity always leads ISM by about 6 months. And then when we look at the relationship between liquidity and BTC, you can see it's almost a perfect match. And when you plot it on a regression plot, you can see that liquidity actually explains the price of BTC over 90% of the time. And it's the same thing when we take a look at tech stocks through the NASDAQ. We plot it against liquidity. You can almost see a perfect relationship right over here. And again, on a regression plot, you can see that liquidity explains the pricing of our tech stocks at 96% of the time. So yes, tariffs, war, geopolitical instability is important, but when you look at the most important variable, it's actually liquidity. This is what they mean by when they say liquidity is the most important variable to explain Bitcoin or these risk asset cycles. So just some conclusion to take away from that data. Number one is a framework. Bitcoin, Ethereum, stocks, all these risk assets. It's not just the 4-year halving cycle for Bitcoin, but the true driver is global liquidity, as you've seen. Central banks are going to continue to expand their balance sheet, inject money, watching the M2 money supply go up, and they're going to refinance these debt through their treasuries. Finally, if you look at 2013, 2017, 2021, when M2 spiked, I know a lot of people say M2 is not important anymore, but you notice that BTC tops out within those months. And then for this cycle, it's similarly set up, but the cycle is going to be longer. It's going to extend into 2026. So liquidity is the master signal. You're going to watch global M2 rise. Risk assets like Bitcoin, Ethereum, stocks, they're going to start to rise as well. The ISM is going to lag 6 months behind, but it's a good signal to watch. So the takeaway is you're going to watch global M2. You're also going to watch the Feds talk about ending QT. They're going to cut rates around the world. As soon as global M2 starts to flatten out, it reverses, that's when you see the bull market starting to top. So yes, the ISM is something that's important for me to watch. It is our business cycle. When it tops 55, 60, 65, and it starts trending back, that's when I know we're close to the end or we're probably at the end. So what are some suggestions and some next move, what I'm going to do? So you'll notice right here now to the end of Q4, so liquidity is ramping up, right? We talked about this, rate cuts, QT ending. So BTC and ETH should start to trend up. We should see them trend up towards Christmas, and I expect a much higher. What are people doing? They're likely accumulating, DCAing, or they're standing still. There's nothing wrong with just holding and watching the market. Between Q4 of 2025, so the end of Christmas and up to Q3, that's when we see the full liquidity expansion. Okay, I'm going to watch out for the ISM very carefully between 55 and 60. If it goes over 60, I know we're late into the game. That's when you watch that euphoric parabolic run that's going to happen. For me, these are all signs for me taking profits. And also with the stuff that I talked about earlier with sentiment analysis. So notice if we get an ISM of 60, 62 plus a greed index of 78, you bet I'm taking profits at that level. So just some of the signal, and then of course towards 2026, the end into 2027, I think the ISM is going to roll over. It's going to start receding back to 51, even below that. Cycle top indicators are all in. That's when you hedge, you rotate to cash. So as I'm taking profits, I'm already rotating to cash. So Bitcoin topped at 69,000 last time. If you're out by 55, even 51,000, I would salute you, because I think it's much better getting out earlier than later, especially with risky assets. So if you're into like risky altcoins, small stocks, things like that, those things are going to tank when the bear market comes around. And you can bet that we're going to have another winter. I don't care what anybody says, we're going to have another winter. So with those types of really risky assets, you have to have a game plan going to these next 6 to 12 months. So lastly, I just wanted to talk about what happens if you HODL through the entire winter. So I've been around crypto for over 10 years now. I've seen a few winters already. So let me give you some advice going forward. A lot of people are going to miss the top, that's for sure. By the time the bear market happens, that's 90% of the crew. You know what they say, 90% of people in crypto lose money because they can't get out at the top, and you can't time the top. Those are just some indicators to watch out for. Now, personally myself, I've always said this before. I've lost money every single time I tried timing the market, especially with my core assets. Like a lot of my investments, big portion of my portfolio is in stuff like Bitcoin, Ethereum, the blue chips. I'm not talking about the shit coins, the small coins, the penny stocks that nobody knows about. Even the mid cap stocks are going to get hit. The large cap stocks are going to get hit. So with stuff like Bitcoin, Ethereum, I've lost money every time I tried to time the top and the bottom. Actually, the winners for me has been HODLing through the last several cycles already. Every time I sold my Bitcoin, tried to rebuy it, and try to sell it at a higher price, I've lost money. So if you had to HODL through, just remember the following. So here's data from 1949 to today's date. If you look at all the Bitcoin bull and bear markets, you know what they say, time in the market is much better than timing the market. And this shows it clearly. If you averaged out all the bull markets, it's actually 5 years and 254% plus, where you average out the bear markets, it's only over a year period with a downturn of minus 31%. So if you had HODLed through any of the bear market, even with Bitcoin and risk assets, you see that with core, really good long-term assets like Bitcoin, you'd end up making money from it. And we endured a lot within the market. So sadly, I have to say I endured 95% of this stuff starting all the way back here. You can see from the collapse of long-term capital management right over here to the Asian financial crisis, the dot-com in the early 90s, 2000, the Iraq war, the 2007-2008 financial crisis that were caused by the housing bubble. I saw Lehman Brothers bankrupt. I always remember every day the Dow was dropping 600, 700, 1,000 points a day. Those were scary days. The Ebola outbreak, we had the China stock market crash, the tariffs, Russia invaded Ukraine October 7th and that war. And then, of course, the inflation spike we had. And then, of course, all of this tariff tantrum and, tariff Armageddon stuff that's been happening since April to now. So the stock market and the crypto market has endured a lot. But what does it say? It says if you've HODLed all the way through all of these events, good long-term assets, the S&P 500, you would have made money. And it's no different with the next bear market as well. So even with our Mag 7 companies right over here, the last 10 years of data in terms of their return, you can see even with NVIDIA over the past 10 years, of course, its return a monstrous 31%, but its max drawdown within that 10 year was minus 66%. So had you given up on NVIDIA, notice Tesla had 75% drawdown, Amazon had 56%, Apple 39%, Meta 77%, Google 44%. So looking at this data alone for solid companies like the Mag 7 or Bitcoin, Ethereum, had you been shaken out of your position and these max drawdown, you couldn't take it, you couldn't HODL through, you could see that there was a lot of money loss just trying to time the top and the bottom of any of these assets. So I'm going to end it with this slide right over here. We're going into Q4 right now, and I do see a massive liquidity injection by the feds. So once our government opens up, they have to expand their balance sheet, they have to rotate, and they have to refinance all that debt that's on their books. Going into next year, my plan is, as soon as I see all those signals, liquidity global M2, the ISM expanding rapidly, if it goes above 60, the business cycle is shooting up, Bitcoin is likely topping out. Once I see 3-4 more rate cuts, that's the time, those are my own personal signals, unless there is a change within the market, to get out. And when I say get out, I'm talking about all of those other coins that people buy, those mid cap, small cap, large caps. I will not HODL anything except for my blue chips, things like Bitcoin, Ethereum, going into the next cycle, or NVIDIA going into the next cycle. So I hope you guys learned something from this video. That was a lot to unpack in this video. If you appreciate this content and like this content, please give my video a like, consider subscribing, and I will see you guys next time.